The U.S. and many European countries stepped up and saved the banking industry during the financial crisis. Now, who will save them as their budgets run into trouble? Here to tell us more about that and other tough questions arising in the first half of 2010 is Todd Harrison from Minyanville Media. Todd has 19 years experience, let's call it 2 decades of experience on Wall Street, including stints at Morgan Stanley, the Galleon Group, as well as Kramer Berkowitz. Todd, good to have you with us on Bloomberg. So this whole idea that the sovereign groups of the world, the countries, they came in, they saved financial markets, but now who's going to save them? They've overspent.
Yeah, well, we like to look at it like a debt sandwich almost, where you have corporate America that rolled out their credit obligations 2 to 3 years, but on either layer, either side of that bread, you have the sovereign situation where you have untenable debt globally, and then on the consumer level, you have consumers that are overextended over their skis, so to speak. So it's a delicate balance as we find our way forward.
And do you think that what happens is we get a kind of have and have not situation where you get some people that are able to weather the storm and others that just are left high and dry?
I think that's been manifesting for some time. The erosion of the middle class, it's been masked by the spending habits of a slimming margin of society, and it's been skewed by the lower dollar for a large part of the last decade. So when we talk about the cumulative imbalances and how this is really percolating through social mood, I think for a large majority of people, they're really feeling a lot worse than the averages may have shown up until the markets cracked in 2008, and then we got that respite, and I think we're in the eye of the storm right now in terms of the process itself.
Do you think that there's a sort of discrepancy between what is really happening in the economy and what investors or what analysts on Wall Street actually see in terms of investment possibilities?
Well, I think that's starting to narrow, and we always talk about on Wall Street and in trading that the chasm between perception and reality is where profitability lies, and that's where we need to find out where we are right now. And I think this is a process of price discovery. To my earlier point, I believe that we are in the eye of the storm. The first phase was the banking crisis, and then you had the sovereign lifeguards come in and save that swimmer, so to speak. And now I believe we're going to go through this process of price discovery on the other side, and this is where it's going to reset the system, hopefully, and that's going to allow for profound opportunities, but we need to go through it in order to get through it.
Resetting the system, that sounds a little scary.
Well, it is scary, but it's like a forest fire. It's scary and it's dangerous, but it paves the way for a fertile rebirthing. And if we were allowed to take that medicine over the course of the last 10 years, in my opinion, we'd be a lot further along the road to recovery. And you mess with Mother Nature, bad things tend to happen, but there's going to be great opportunities. I think you just need to, I think the first half of this decade is going to be about perseverance and preservation. I think the back half of this decade, for those who can preserve their capital, they're going to have great opportunities. We just need to get there.
Talk about what's happening with the public pension systems and how important that is to this outlook that you're describing.
Well, but it's a great point. It's on all levels, and you look at credit default swaps right now are showing that California and Illinois are neck and neck in terms of
a race to the bottom.
A race most likely to default, and through a big picture lens, they both trail Greece, but they both lead the dark horse Spain by considerable margin. And the pension problems are part of that larger mix. So you're seeing a lot of municipalities starting to cut necessary expenditures, whether it be education, whether it be police forces. You're seeing some mandatory push-outs of the pension liabilities, and this is all part of a much more endemic of a much bigger process of deleveraging.
Does that mean that the public pension systems have to go back to their potential beneficiaries and say, sorry, we're not going to really be able to pay you what you promised?
Yes, in a word. I believe that it is part of the readjustment of expected returns, and it's a readjustment of the machination itself that we need to go through. But again, I look at that through the lens of optimism, because once we can allow to market through a much larger lens, all of us, in terms of where market prices are versus where we all feel that they are, or where you can sell them, because that's really what it comes down to: is what do you promise, what can you deliver, and where can you make a sale? That's what something's worth.
What about this readjustment of investor perception? Are people just going to have to learn to live with lower returns?
I believe they will. There's going to be spates of volatility both ways, and last year there was a tremendous rally. There was, if you caught it,
Right. I mean, if you were lucky enough to buy, at the 666 March low.
Right. But therein lies a very, very critical distinction, because the populist opinion is very rarely the profitable opinion. So you have to really juxtapose perception and reality and make that trade. But at the same time, social mood and risk appetite shape financial markets. So it's almost like this cumulative sense of foreboding that's really starting to weigh on investor psyche. And whether or not they're going to go ahead and expand those risk appetites is going to be telling in terms of what the markets do going forward.
All right, we're going to have to leave it there, but I want to thank you very much, Todd Harrison, as always, coming to us from Minyanville Media, sharing some insights into the market and giving us some sobering thoughts on risk appetite.